How's it going? Brian's here. Way to go, Mr. Brian. Tried started a new job for more investing money. Cool beans, Jess. Username. All right, 8492. Hi. Derek, what's up? What's up? What's up? All right, let's get. Probably I'm still getting all the cameras up and rolling. Got to get our face. I got to get a new camera for Facebook. I mean, this one is absolutely horrible. Okay, and you know what I don't like about Facebook? You know, you do all this effort, and they only let the video stay up for 30 days. That's it, just 30 days. Hey, can you look at two? What are we investing in today? Well, today, what did I buy today? I bought something interesting today. I bought some Walgreens today. So we're going to take a gander at that in a little bit. Mommy, make daddy stay in the race. If he drops out, who's going to protect me? Ha 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 ha. That's a horrible thing. I liked it better in the old days when people actually had. Lily has new highs, huh? Eli Lilly? Okay, we'll take a look at Eli Lilly. Why not? All right, there we go. Now, we just got YouTube up and ready to go, and then we'll be good to go. So here's Johnny. All right. Start streaming. Manage stream. It's not made for bloody children. It's for entertainment purposes only. And we got 3, 2, 1, and you're live. Yay! All right, so hey everyone, this is James from Dividend Stock Talk. Now that I'm live, hey, Mama's here. Okay, Dividend Stock Siri plummeted over 12% today. Glad I got my 1% when I did. Way to go, Jess. Yeah, I didn't like Siri. We saw where it was, and we were talking about this yesterday with it going up that high. Yeah, there's going to be profit taking, and what happened? There was profit taking. There you go. So as I was saying, my name's James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you along for the ride for that safe, predictable, consistent 1% per week. That is my goal. That is my goal, my mantra, my whatever you want to call it. All right, however I reach it, I look for safe, predictable, and consistent 1% per week. I came up with a trading strategy for my daughter back in '08 when she was just a little youngin', 9 years old. Pete Karras, how are you doing? Doc, how's it going? Hey, Doc, got that account all hooked up. We should be doing something this week with it. That would be cool. All right, so as I was saying, at 9 years old, she wanted to do the same thing and Daddy was doing. So I said, okay, fine, no problem. So here's my challenge. Here's a challenge when you're trying to teach a 9-year-old how to trade. Elvin, Pro King Services, what's up? Okay, Twisted Artist. New to this, I know nothing about stocks. Actually, Twisted Artist, you know more than you think you know. Okay, people say that all the time. I don't know anything. Well, actually, you kind of do. Because, see, you've heard of Coca-Cola, you've heard of Pepsi, you've heard of Goodyear, you've heard of Ford, General Motors, British Petroleum. You've heard of all these companies I do. Clorox, Capital One Finance, Kinder Morgan, JP Morgan. There's a lot of them. You've probably heard of them all. Kohl's, Nordstrom's, Macy's. Anyway, so all these companies that I've invested in, you probably heard. Secretariat, Hormel is now gone from my portfolio. Horrible for this strategy. Hey, you know what? I've got Hormel also. Okay, it is a dividend king, and it's dividend king, which means they've increased their dividends for over 50 consecutive years. Is it the greatest stock for this type of strategy? Maybe it is, maybe it isn't. Okay, I didn't do very good with it, but all right, so let me get back to, for the people that are new here. Number one, I do my disclaimers, okay? I'm not an investment advisor, okay? I'm not an accountant. I'm not a stockbroker. I'm not anything whatsoever connected to the financial institutions anywhere, anyhow, any way, any form, however you want to look at it. No, that's not me, okay? I'm just an average, everyday guy. Got tired of being screwed around by the, let's just call it the man, you know, 'cause that's what we always call it. Get in trouble by the man. All right. So I didn't like what I was getting. 4%. You retire. Here's your money. You get 4% of what you earned. Yeah, that just didn't work for me. So I had to come up with a trading strategy that was better than that. My daughter wanted to learn how to trade. So here's what I had to come up with. Something that was simple. Hold on, let me get this. Simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to overcome when teaching my daughter how to trade. Okay, she's 9 years old, not in the gifted math class, so she's just like a normal everyday person. Okay, normal everyday person. So it had to be simple, safe, predictable, consistent, and no way to lose. That's the 5 criteria. So here's the 5 rules. Rule number 1. Never buy something you do not know, you do not understand, you don't comprehend, and you do not want to hold on to for a long period of time. Because more than likely, there are some times you are going to have to buy a stock and hold on to for a long period of time. So most of the time, usually, people would buy a stock and hold on to it for decades. Well, we're not doing that. We're going into it with that mentality. Okay, I want to buy a stock that I want to hold on to for a very long period of time. Great, I have a whole list of them. I got about 300 of them. Okay, I can't afford all 300 at once, so I put them in a Rolodex or a revolving door, merry-go-round, whatever you want to call it, and I do it one at a time. Roll out the barrel, roll out the barrel. Okay, anyway, no, I just I rotate them, and I rotate them based on the calendar. Okay, when are they paying their dividends? So here's the thing. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years or more of increased dividends, weekly options, and then double, triple, quadruple check the numbers to make sure the numbers work. We're going to get into that in about a second, but let me tell you how I do how I rotate them. Okay, so there's 365 days in a year, which is 12 months, which is 4 quarters. 4 quarters, January, February, March is first quarter. April, May, June is the second quarter. July, August, September is the third quarter, which we're in at the moment. Then October, November, December is the fourth quarter. So got over 2% on Intel earlier this morning. Way nice. Intel, let's put Intel down because I don't think Intel's on the list for this week. No, it's not on the list for this week. INTC. We'll take a look at Intel in a little bit, Wade. Walgreens hit the bottom. They got a new CEO. Well, it's about time they got a new CEO. All right, so where was I? Oh, okay, so there's 4 quarters. Okay, now each one of these companies on this calendar will pay a dividend every 90 days, every quarter. First quarter, second quarter, third quarter, fourth quarter. And I do the exact same stocks over and over and over again. Take out Comcast. Okay, first week in July. Guess what? Comcast is also the first week of January, first week in April, first week in July, first week in October. Okay, so the first week of the quarter, every single quarter, 1, 2, 3, and 4. Comcast is in the first week. Well, so is Cisco, Disney, J.P. Morgan. And then the next week, you get Verizon, General Electric. Okay, this is just one of my lists. Let's take a look at Warren Buffett's list to give you guys an idea of what we're looking at. Okay, this is Warren Buffett's list for the month of July. Now, you'll notice it says July 23. The reason why it says July 23, because these ones down here aren't listed yet on July 24, because it's a couple of weeks away. Whoops. Let's go back one. Hold on. Okay, this is July 23. Watch what happens to the ones on the bottom when I hit for July 24. Okay, that's like 3 or 4 weeks out. They're not posted yet. Okay, there's 4 dates to remember. First date is the announcement date. Well, they haven't announced the dates down here yet. That's why I look at 2023. Okay, so look at those stocks that Warren Buffett owns. Mendelez, U.S. Bank, Globe Life, American Express, Bristol Myers Squibb, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally, Aon, ATVI, Wells Fargo, Capital One Finance, and DHI. Okay, if they're good enough for Warren Buffett, they're good enough for me. That's my philosophy here in this situation. Okay, so what other stocks do I look at? Well, I look at the Dividend Kings. Those are companies that have increased their dividends for 5 decades or more. 5 decades or more. Okay, then there's the Dividend Aristocrats. 25 years of increased dividends. Then there's the dividend champions, 25 years of increased dividends. And then you get the dividend contenders, 10 years to 24 years of increased dividends. So once I figure out what companies I like, now I will take a look at each and every one. I won't look at Warren Buffett's list. I won't. What's the point? If it's good enough for Warren, it's good enough for me. So I don't even bother with that. But what I do bother with is my own list, okay? Here's my own list. General Electric, Comcast, Capital One Finance, Cisco, JP Morgan, American Express, AbbVie, Abbott Labs, Hormel, PNC, Caterpillar, Procter & Gamble, blah, blah, blah. Almost every single stock on my personal list you probably heard of. I will go in and I will check out these. They are the Dividend Kings, the Dividend Champions, Dividend Aristocrats. Every stock I look at has 20 years or more of increased dividends. That's one of my criteria, and that's the big one. The second is weekly options, because I want a safe, predictable, consistent 1% per week. Only way I'm going to get that is with weekly options. Did you create the calendar? No. This calendar is available on Thinkorswim through Charles Schwab. Okay, now I have a Charles Schwab account, which Thinkorswim. Now Thinkorswim used to be a trading platform all by itself. Okay, but then it got bought out by TD Ameritrade. Now TD Ameritrade got bought out by Charles Schwab. So now Charles Schwab owns it. It's a great trading platform. Everything I need to be a trader is in there, because this was created by a trader. Okay. So does E-Trade and Fidelity have the same calendar? I really honestly couldn't tell you. Who could bail out? Username, I have no idea what you're talking about. Read the article today, WB looking to close 25% of their locations in the U.S. and more if required. Okay, Secretariat, that's not the news I read. Okay, the news that I read a couple of days ago was that they're planning on closing 150 stores in the U.S. and closing down 300 stores in the U.K. for a grand total of 450 stores. That's not even close to 25% of their stores, because they got 8,500 stores worldwide. Okay, 25% of that, of 8,000, is going to be at least 2,000, a little over 2,000 stores. I can't see that happening. 2,100 stores. Seth, my man, nothing safe, consistent when stock tanks like WBA. Oh, who could bail out or buy WBA? That I don't know. Walgreens, Jerry, Allot. Hello, Coffee Break Logistics, Brez. How much money worth of stocks would you need to have a nice dividend income flow? Okay, Brez, it's different for everyone. There's 130 people here. Okay, I can almost guarantee each and every one of us has a different amount of money to play with. That's number one. Number two, we probably all have different monthly requirements in order to live comfortably. I live comfortably off of 1% of my earnings, but that's me. I don't have any huge bills. I don't have any huge commitments. I come and go as I please, okay? And I am scared about Walgreens. All right, Jerry, I'm hearing different news stories, okay? Now, I just heard something from someone today. They said 25% of the stores, which I find that hard to believe, okay? Not saying that he wasn't true about what he read, but I read, last week we read 4 different articles and got 4 different numbers. Okay, then I read an article, and the article that I read said 450 stores out of 8,500. Now, Secretariat comes on and tells me 25% of the stores. Well, that's a lot of freaking stores. Okay, someone also told me they have a new CEO. All right, Doug Schmidt, we're going to take a look at Nike. Hold that thought. NKE, we're going to take a look at Nike. I actually have some Nike. Coffee break, Brez, okay. Okay, so Brez, you're going to have to decide what's right for you. Because at some point in time, you are going to retire. And your retirement income has to come from somewhere. So you're going to have to get proficient with your income when you're retired. Whether it's going to be cryptocurrency, whether it's going to be real estate, whether it's going to be stocks, whether it's going to be commodities, whether it's going to be futures. You've got to figure out where is your income going to come from. It's got to come from somewhere. Or unless you have enough money, we can just take a tidbit out and just throw it into a savings account or a CD. I mean, everybody has a different goal. Okay, mine, 98% of all my money is invested in the stock market at all times. Now, I've been doing this for over 20 years. I know what I'm doing. I do not suggest anyone do what I do until you get good at what it is you want to do. I mean, that sounds kind of freaking weird. Oh, can someone tell me if YouTube is up and running? This screen right here is live on YouTube. Can somebody check out YouTube and see if the screen is live? Okay, I greatly appreciate it. We are going to take a look at Nike a little bit. How do I join your morning trading group? Inspire me more. Well, you know what? I am almost done with the website. So let's go. Okay, here. Go to the 10-minute trader. There we go. This is the new website. And it's a little clunky at the moment because I'm not quite sure with all the links that I need to put in. All that kind of nice, neat stuff. All right, and right here, view all. All right, now we're going to come to see all my trades for the year. Here they are, all my trades for the year. All right, so in case you wanted to check it out, where is that link? Right there. Live trading. Okay, right there. Live trading, and that will bring you to Patreon. Dividend Stock Talk. Look at this, my pretty face. Yay for me. All right, anyway. Now, I do post every day the meeting for the day. You know, this morning we had a what do you call it? A live trading group this morning. Now, I have a live trading group every morning. Monday, Tuesday, Wednesday, Thursday. Okay? Now, we don't do a whole heck of a lot Tuesday, Wednesday, Thursday, but do most of our trading on Monday, and Friday we check in to make sure everything is copacetic for the weekend. Okay, bought 2 Walgreens shares, shopping at Walgreens every day now until it goes back up. Peter. All right. Is 39,000 shares up? Uh-oh, I missed that question. Okay, is 39,000 shares of stock enough for a long-term stock? All right, junk bum, I have no idea what we're talking about. Okay, now 39,000 shares of what? Is it a penny stock? It's not going to mean anything. Okay, sub-penny stock, that's even worse. Okay, is it, you know, something like, like Intel, Bank of America, AIG, where they're in the 30s and 40s? Or is it something more like Costco, which is in the thousands, or Spiders, which is in the 500s? I have no idea. There's not enough information for me to give you any kind of feedback on that. James, can you go over buy open, buy close, selling close, sales open? LTC. I've never heard of LTC, but we'll take a look at it. Okay, I have my girlfriend doing 1 contract of M, doing the wheel. She's having success. Oh, cool beans. Who the hell's Nancy? How did that person get on there? Wade. All right. Well, let's see how your girlfriend does, Wade. So how does one join your morning trading group? All right, inspire me more. I just pointed it out. It's at Patreon. Okay? Patreon, Dividend Stock Talk. You know, do Google search Dividend Stock Talk, Patreon, or Patreon Dividend Stock Talk. One of those. Okay. Sinba, how you doing? Mikey G's in the house. No, it is not. All right, coffee break. You're saying no, it is not. I'm not quite sure. Oh, YouTube's not working, huh? Huh. Display capture. Nothing on YouTube at all? Display capture, let's junk that. Well, let's get a new display capture up and running. Display capture. Okay. Okay. Now, all right. That should be working now. All right, is it working now? Google, please. Oh. Kike Simone 2. Google, you really want me to take a look at Google? Google doesn't pay dividends. Google's going to be a no matter which direction you look at it from. Okay, so Google is a big fat no. Couple of reasons. Okay, reason number one, it's at the current high. All right, so when you're buying stocks, you make money by buying low, selling high, not buying high and waiting for it to get higher. I don't do the thing. Okay, higher, lower. No, I don't. I like getting it to bounce off the bottom. Look, see, stocks go up, they come down. This is where I want to get in. Stocks come up, they come down. This is where I want to get in. They come up, they come down. Up, down, up, down, up, down. That's where I want to get in, where it comes off of a 30-day high. Yes, YouTube is live. Good. Cool beans. All right, we got 14 more questions before we go on to the next one, Michael David. You are showing, but not the top screen. YouTube screen is not live yet. Hey, James Seth, why you're not showing any activity on WBA week to week? Okay, WBA week to week. I got WBA right here. What did we do? Okay, jumped in at WBA this morning at 11.17, sold the 11.50s for 30 cents. That's over 1%, or 13 cents. That's over 1%. Okay, I did WBA this week. Okay, not seeing the chart on screen on YouTube. Okay, hold on. Huh. Now, someone said it's working and someone said it's not working. So it's got to be one or the other. Either it's working or it's not working. Video display capture. Display capture. Okay. All right. Automatic. Okay. Okay. Now I want to put video device above it. All right, something's not copacetic here. All right, so it should be working. All right, not seeing the chart on the screen on YouTube. How's it looking now? Yes, YouTube is live. Okay, you've got only one live on YouTube. Trying, refreshing. Okay, so let me figure this out. Back up here. YouTube. Okay, I'm actually going to go to the YouTube live and see what's happening. If I can go fast enough, maybe I can catch myself. Working now. Oh, I only have one live going on YouTube. What the hell? All right, live. Okay, well, one is working, the other one's not. No chart on YouTube. All right, so I'm going to shut YouTube down, and then I'm going to start it over again. All right, stop streaming. Okay. Now, let's try doing it again. All right, Mason, we'll take a look at Mara. M-A-R-A, we'll take a look at it. Okay, so, stopping the stream. It's going to give it a few minutes to actually stop, so while it is stopping, let's take a look at what we're looking at. All right, so Google, as I was saying, Google doesn't pay a dividend, so Google's never on the list. Sorry. And Google is at a high of the year. So that's another reason I'm saying no, because Google, I don't like buying anything at the high. I don't. I like to go from the low, buy low, sell high. You've heard that for decades. Thoughts on SMH? I have never heard of SMH. I've heard of SMJ, that's Smuckers, but SMH, no. All right, that should be done by now. Well, all right, so I shut it down. Now let's get it started. When will we see Mara? SMH shaking my head. Never heard that one before, shaking my head. That's funny. All right, so let's try the broadcast again. Launch anyway. It's going to pop up any second. All right. Start streaming. Manage broadcast. No, it's not made for bloody children. Entertainment purposes only. Oops, it crashed. Now it should be going live any second. Okay, so hypothetically speaking, it should be coming live. Hey, Florida gal, how you doing? Pedro, Intel. All right, we'll take a look at Pedro. Intel, INTC, that's already on the list. We'll take a look at that one. Ben Financial Institute, huh? Franklin, thoughts on O? Been wonderful if I should start investing in dividend stocks. Bethany. Bethany, first of all, welcome. Bethany, I'm going to tell you my honest opinion on O. It's going to be a no, and considering you're new here, let me go through the whole gamut for you why I'm saying no to O. All right, O, first off, is a monthly options. Okay, now I like to trade weekly options because it allows me to catch a check every 7 days. So every 7 days I can get paid. All right, that's why I like weekly options. Monthly options, I can get paid once a month. Okay, so O does pay O does pay monthly dividends. Okay, that's going to be your argument. I know, because everybody gives me that same exact argument. No, that ain't it. That ain't it. Where the heck am I? All right, let's go to. I'm going to go to Yahoo Finance, so that I can show you. O, and then maybe you might think twice on investing in O. Now, there's a reason why I'm saying this, okay? Because you're here, one, you're showing an interest in dividend investing for weekly cash flow, not monthly, weekly cash flow. So let's put in O, and give it a second while it loads. Now, just in case you didn't know, this screen behind me right here is live on YouTube. So you can look at on your big screen TV in your living room or your bedroom, wherever you have your big TV, and you can bring it up on your laptop, one or the other. Okay, so here is O, all right? You know, this is the main reason why I don't like it. Are you ready? The yield, 5.9%. All right, you're getting a dividend every month. Great, but you're only gaining 5.9%. Janine, how are you doing over there on Facebook? And Mata, how are you doing over on Facebook? Now, I want to apologize to you guys on Facebook because the camera is crap. I'm waiting to get a new camera for Facebook specifically, but there's not much action on Facebook. That's why you guys get the crappy camera. Sorry, it just is the way it is. Okay, so Bethany, number one. Oh. 5.9%. I am showing you a strategy right here for free, everything you need to know to get a simple, safe, predictable, consistent 1% per week using a good quality dividend stock and weekly options. One of the safest trading strategies there is the covered calls, where you buy a stock, such as O, and you sell the option for someone else to buy it from you for the exact same price you paid for it. So if O is at 53 right now, okay, okay, O is at 53 right now. I can sell the 5250s for $1. All right, but I got to hold it for 2 weeks. And if I'm wrong, I have to hold it for another 4 weeks after that. And if I'm wrong again, I got to hold it for another 4 weeks. But here's the thing: this number never usually works. Okay, so at $1, if I'm buying it at 53.34. I'm losing 50, 70, I'm losing 76 cents right off the top because I'm buying it at 53.34, selling it at 52.50. okay? Because the 55 is only going for a nickel. That ain't worth it. So I'm getting 62 cents, something to that effect. But I got to divide that by 2 because I'm holding for 2 weeks. Then I multiply it by 52. The numbers just don't work. The numbers never work on a monthly, okay? Then make matters worse, here we are right now. Well, where's it going to be the next 2 weeks? Well, that's 14 days. All right, maybe, I don't know, but let's take a quick look. Okay, a year ago, it was at 59.56. Now it's at 64.26. Oh, no, the high was high was 64.26. The bottom was end of October, and that was 45.12. Okay, she ended out the year at 57. Now take a look at where we are now. Okay, last 60 days, she goes up, pulls back, up, pulls back, up, pulls back. Now she's going to the upside. Great place to jump in. Look at it. Here's your bottom. Let's go to the 30 days so you can get a better look. Okay, here you go, 30 days. Okay, dropped, up, drop, up, drop, up. Okay, so she has more space to go to the upside. Great, wonderful. But it's a monthly optionable stock. So I have to be right, not for the next week, not for this week, but for this week and next week. So I'm trying to predict where it's going to be in 2 weeks. Okay, is it going to go up, hit its high, turn around, come back down again, and then I start losing? I don't know. But if I'm not right, guess what happens? Okay, 19th of July, that's 2 weeks away. After that, the 16th of August. Well, now I got to figure out 6 weeks. It just the numbers just don't work. Okay. So that's 2 reasons. Let me give you one more reason. All right, let's go check out the dividends for O. So for that, we're back at Yahoo Finance, looking at historical prices. Now, historical prices will tell you every single thing you need to know. The high, the low, the open, the closed, the dates, and we'll want to look at the dividends in particular. Now, I want to look at all the dividends that O has paid out. Okay, so for the year of 2024, 26, 26, 25, 23, 22, 21, 20, 19, 18, what was that? 2014, they had no dividends in June. Wait a second. Oh, 3 dividends in June? Okay, so it did pay in June. All right, I don't know why they had 3 times. Okay, April, 18, 15, 14, 13, 12, 11, 10, 9. Well, they are consistent with increasing. Okay. So in 1994, it was 7 cents. Then in 95, it went up to 8. 96, it's still at 8. Towards the end of 96, it jumped to 7, to 8. Okay, it was 8. Okay, so they're not consistent with increasing their dividends. That's number one. All right. No, but they are increasing. Look at 9 cents. They started paying 9 cents in September of 1999. Now, the next time they increased was 4 years later, okay? May of 2023. Then it went to 10 cents. Then stayed at 10 cents until 04. Then it went to 11. And 04 to 06. Yeah, they're not consistent with the increasing of dividends. However, they have been paying dividends if you like O. All right, so they have been paying dividends consistently. Okay, just not increasing consistently. Now, I like companies that increase every single year, year after year after year. Okay, those are the dividend kings, the dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. I like those companies because they're consistent with their increasing, and they have weekly options. Because monthlies, if I'm wrong, I have to carry it another 4 weeks. All right? And if I'm collecting, even if I'm collecting $1 on a $50 stock, that's only 1% for the week. But it's not, because see, I'm losing $1. Well, I'm not completely $1, but 50, 70, I'm losing 76 cents. Okay, so I'm buying it at this price and I'm selling it at that price. I'm losing 76 cents, which means I'm only walking away with 24 cents. 24 cents for 2 weeks. That's 12 cents a week on a $50 stock. That's like 1/4%. And 1/4% for the for the year. I mean for for the week. 20, that's like 12% a year. Okay, now 12% a year is a lot better than the premium that they're giving you. I mean the what do you call it? The yield that they're giving you. Okay. 5.9. Okay. So you can boost it up by doing monthly options on it. But the thing I don't like about monthly options is that you have to predict 4 weeks out. Okay, so look, here's a week. How do we break this down and see the weeklies? There it is, right there. Okay, each one of these lines represents a week. So where is it? Right there. Okay, from here to here is 1 week, 2 weeks, 3 weeks, 4 weeks. All right, so look where it gone in 4 weeks. From the high, down, back up, and then back down again. Okay, let's go another 4 weeks. 1, 2, 3, 4. So from here, okay, she went sideways and then she went down. Look at what you're actually doing. Now, I like weekly because it's easy to see. Okay, here's our bottom right here. What's that 30 days? Okay, here's the 30 days. Down, up, down, up, down, up, down, up. Great. I see for the rest of this week, right to about here, hypothetically speaking. Okay, that doesn't guarantee anything. Okay, but where's going to go another 4 days after that? So I got to figure out 2 weeks because we got 2 weeks left for this option, the 19th of July. We got 2 weeks left. Okay, so here's where we are. Okay, for this week, yeah, up here. But once it gets up here, that's a new high. Then it's going to come back down. So in 2 weeks, it's not going to be here. It's going to go up and then it's going to come down again. I have no idea where it's going to be. I don't like monthlies. They just don't pay, number one. Number two, very difficult for me because I'm a weekly trader. I buy on Mondays. I like to be out by Friday. I don't want to buy on Monday and have to hold it for 3 or 4 weeks. That's not what I'm here for. I'm here for a safe, predictable, consistent 1% per week. And I can only do that with weekly options. I cannot do that with monthly options. So, that's a no. Sorry. Florida gal, great. What about ARM? I'll put ARM on the list and we'll take a gander at it a little bit later. Okay, now it's working. All righty. Okay, Ben Franklin. Yep, we're going to take a look at Ben in a little bit. Never heard of weekly options. I'm intrigued. Well, you come to the right place to be intrigued because I like to be intriguing. No, I'm what you would call an acquired taste. At least that's all the women I've had in my life say, James, you're an acquired taste. Because I don't do things normally. I don't. Because if I did, I'd still be working. Because the amount of money I have now is perfect amount for me to live off the 1% per week. Great, that's fine. Takes care of all my bills. Wonderful. However, if I did it old school style, where I gave my money to a money manager and say, hey, you can get a 4% draw every year. Yeah, I'd still be back working, trying to get from where I am to where I need to be to get the exact same amount of money that I'm getting right now. Okay, so the amount of money I'm getting right now, I would have to 10x my account size in order to do what traditionally is what's done, which you give your money to a money manager, they manage it for you, they give you a 4% draw, and you have to live off of that. Yeah, I did the math. I'm going to have 10 times what I have at the moment. Sorry, I prefer, 10, 15 minutes a day. It's less than an hour a week to manage my own money, and that amount of time I can make just enough to live comfortably. All right, Michael. Boom, screen working now. Not yelling. Just James and wear glasses. Yeah, the text is small. Okay. L, Mara bid and ask both over last price. Good. Mara is on the list. L, we are going to take a look at that. Coney, oh, wise guy, Coney. Should I tell you now? No, or should we take a look at it and tell you no after I show you the numbers and the reason why I say no? No real estate for me. There is a massive commercial real estate bubble that's happened that hasn't imploded yet. You're absolutely right. It's going to. What about ODT SPX options? Sorry, Jess, that's going to be a no. Okay, SPX. SPX. Okay, so two things, Jess. For some strange reason, you think that I can afford 1,000 shares of a stock that is 5,500. No, is it 5,572? I don't know what it is you think, but no, I don't do stocks over 250 bucks. I especially don't do something at $5,000 a share. And look where it is. Okay, it's at a high. It's going to be a no and a no and another no. Okay. Oops, I missed all those questions. Oh, wow. I'm missing all these questions. I'm starting to grow my portfolio. Would you recommend drip reinvesting through E-Trade? Ransom. This strategy here was created for a 9-year-old little girl. Simple, safe, predictable, consistent, 1% per week. Now, if you're just starting and you're okay with what you're doing, fine, great. All right, but if you want to start doing your drips, fine. You know, you add that to your portfolio and let it increase faster. Okay, now I do have a dividend capture, I do have a compound interest calculator that'll show you how quickly you can get to your goal, if you even know what your goal is. A lot of people don't. What do you think Alliance Resource RCE Partners? Never heard of it. Lowe's. Copilot wants to take a look at Lowe's. We took a look at Lowe's this morning. Shared live. What are you plays? Well, what did we do this morning? AEO, Kohl's, MPW, Walgreens, Wynn. What else was there? Walgreens, Macy's. I think that was it. All right, so SPX is a no. Sorry. Verizon, VZ. We'll put Verizon down. Take a gander at it. I see you just do dividends. Yeah, anonymous. I do just and only dividend I gotta say pre-qualified dividend stocks. Okay, because there's 9,567 stocks in the stock market. You can choose any day. All right. So, out of those companies, out of those 9,500, yeah, half of them are going to share their profits. The other half are not going to share their profits. So you got to decide as you're walking into the store. Let's say you're walking into the store of the stock market. On your left-hand side, you have all the companies that share their profits. On the right-hand side, you have the companies that take all the profits, put it back into the company for capital growth. If you're looking for capital growth, this is the wrong place for you. Okay, we look for safe, predictable, consistent 1% per week using only dividend stocks and dividend stocks that have consistently increased for 20 years or more. Now, out of the 9,567 companies, there's only 300 or less that have 20 years of increased dividends and weekly options. That's plenty to choose from. 300. Now, at 20 years of increased dividends, what does that mean? That means they're at least 20 years old. Okay, so they made it past the 3-year hump. You know, most companies don't make it past 3 years. Okay, then maybe 1 in 100 make it past 10 years. And then what was it? 1 in 1,000 make it to 20 years. But here are companies that consistently increase year after year after year, which means they're profitable every single year. So why would I buy something? Why would I put my money in a company that's not profitable? Do covered calls expire worthless? I like them to expire worthless. Or I prefer them to be, exercised. Okay, so you buy the stock on Monday, you sell the option, perfect world. the stock goes up or stays the same, I'm back out of that stock on the weekend, and then come Monday morning, I'm back into all cash again. That's a perfect world. Does it happen all the time? No. Some brokers try to sell it for you. Yeah, Styles. Some brokers will not allow you to have an option expire worthless. Okay, Thinkorswim allows it to expire worthless. Great, right? Robinhood, you got to buy back the options on Friday. Even if they're worth 1 penny, you still have to buy them back at a penny. Okay? They don't allow them to go worthless. Yep, Styles, you're correct. Copied covered calls are good because you take the credit premium. Exactly. Anonymous. Bethany. Oh, okay. Thank you for explaining this. Covered calls are over my head, but I'll stick around. Now, Bethany, I'm going to explain something to you. Now, don't think of this as derogatory any way whatsoever. Okay? A covered call is the same thing as girl math. What do I mean by girl math? Well, you get yourself this nice, beautiful dress, okay? Hot shoes, and you look great, okay? You leave the price tag on, you wear it out for the night, you take it back to the store the next day. That's girl math. Same thing. You're buying the stock, you're using it to collect a premium, at the end of the week, you're getting all your money back. Same thing, kinda. Or you can look at it this way. Let's say you get an old car sitting inside of your yard, slap a for sale sign on it, $1,000, great. Tom down the street says, hey, I'll give you $1,000. Here, take $100, hold it for me till Friday. If Friday comes along, I will come buy it from you, and then you'll get your $1,000. Or if I don't come back on Friday, you keep the $100, and then you sell it again on Monday. Same thing. Covered call's really not that difficult. It's giving somebody the right, but not the obligation. Okay, so if I buy, let me pull one up, give you an example. I always use Macy's as an example because I like Macy's. Hey, we were talking about this, remember? Where she shot up on Friday? I said, yeah, there's gonna be profit taking on Monday. What happened? Profit taking. There you go. All right, anyway, so I'm just gonna use this as an example, right, Bethany? This is Macy's. I know you know who Macy's is, all right? So let's say, here's the last traded price. Okay, now these numbers you can find anywhere. I'm just reading the numbers from the stock market itself. Because if I'm in E-Trade, Fidelity, what do you call it, Webull, Robinhood, International Brokers, whatever, it doesn't matter. All the numbers are the same. Okay, what was the last trade? Okay, 1893. What is the bid? 19. What is the ask? 1907. Here's a little clue. If both the bid and the ask are higher than the last traded price, the market maker is going to push it up. Okay? Usually. Now, what happens yesterday? The bid and the ask were lower than the last traded price, and he pushed it down. Exactly what he did, see? All right, so that's not what I'm trying to get to. This is what I can buy it for first thing tomorrow morning, 1907. Okay, so let's say I go and buy 100 shares for 1907. That's $1,900. All right? Now, let's say I want to sell somebody the rights, not the obligation, just the rights to buy it from me for the exact same price I paid. If I'm paying 1907, I can sell it to anyone for 19 and collect 39 cents. So what does that mean? Well, what it means is I'm buying it at 1907, okay? Because that's what the price is. The bid and the ask are already posted. So tomorrow morning, buy it at 1907, all right, first thing in the morning. Also, first thing in the morning, I'm going to sell somebody. It doesn't matter who buys it. If it's posted here, okay, that means there's somebody buying it. It doesn't really matter who buys it. You don't have to worry about that. Okay, you just say, all right, if I'm buying 100 shares at 19, I want to sell one contract at 39. So what does that mean? Well, let's find out. Let's close this out of the way. Let's open up this right here. This is what's called covered stock. Okay, so I'm buying the stock and selling the option at the exact same time. Now, remember, I said I like it at 19. So I'm going to bring my cursor over to the 19. See it right here, the 19? Now, I want to do right here where it says buy. So I'm going to buy it at 19. There you go. And it automatically fills, okay, right here. And if we read it closely, I am selling, I'm doing a covered call. I am selling 10 contracts, and I am buying 1,000 shares. Macy's, 12 July 24, that is this coming Friday, all right? The call option and the stock. Okay, so I'm doing 2 trades at once. I'm buying the stock and I'm selling the option, all in one trade. Okay, I like to do a market order because that way it fills instantaneously first thing in the morning. Okay, I'm gonna hit confirm and send. Okay, this is the order right here. I always tell people, read it out loud so you can hear what it is you're doing to make sure, because every once in a while we make mistakes. I make mistakes all the time. That's why I still paper trade. I get 6 accounts, but I still paper trade because I do make mistakes. All right, I'm gonna buy 10 covered call Macy's 100. Those are the weeklies. Okay, I like weekly money. I like money every single week. 12 July 24, that is this coming Friday. The $19 call on Macy's to open. Well, remember I told you it's 2 trades. It's the option trade and it's the stock trade. Now, my break even is $18.59. Well, we saw where the price is. The price is at $18.93. So if my break even is $18.59, I will make money if the stock goes up. I'll make money if the stock stays the exact same. I'll even make money if the stock comes down to $18.59. Well, $18.59 is my break even. Okay, so all 3 of them are in a positive. What happens if the stock goes from 19 to 10? How much would you lose from options? Okay, Alexander, you don't lose anything. All right? Now, when you sell the option, you're just giving somebody, you're selling somebody the rights to buy it from you at $19 from tomorrow morning until Friday afternoon. After Friday afternoon, that person no longer has any claim whatsoever on your stock. Okay, so if the stock goes up to 20 or 30, yeah, they can buy it at 19. If it drops down to 10, well, they're not going to buy it. You get to keep your stock. So that's why rule number 1 is never buy anything you do not want to own long term. So question number 1 is always, do I like Macy's? Do I like Macy's at 1907? So let's get back to the example. If I'm buying 1,000 shares, selling 10 contracts, my profit, okay, my max profit's right there, $410. Well, what is it costing me? It's costing me $18,596. Well, what does that mean? Well, let's pull up the calculator. If my profit is $410, right, and it's costing me $18,590 just for that one position, well, I'm making 2.2%. All right? That's what I'm making, 2.2%. Now, ask yourself, is 2.2% a good amount of money for a week? Well, for some people it is, and some people it isn't. And if it's not enough for you, you're in the wrong place. Because 2% a week is over 100% per year. Okay, now most people spend more time planning a family barbecue on the weekend than they do the personal finances. I'm talking about 10 to 15 minutes a day. Okay, so you get up a little earlier, 10 to 15 minutes. It's not that much. It's really not that difficult. It was created for a 9-year-old. People stop making it more complicated than it needs to be. If the company, let's get out of here. All right. I've got to reset everything. Okay, there we go. Back to the marketplace. Right there. Okay, so if a company is paying a dividend, right? Procter & Gamble, Caterpillar. Procter & Gamble, if I like Procter & Gamble, I want to buy it 2 weeks before the dividend, okay? There's 4 dates to remember. Date number 1 is the announcement date. That's pretty plain and simple. Date number 2 is the EX date. That's the last date a stock trades before the dividend is paid out. That's these little green dots. These are all the EX dates. That's the date I want to see because I want to buy it before the dividend because stocks have a tendency to go up before they pay their dividend. Now, date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. Well, of course, we all know that's when you get your check. What would you invest $1 million in to get a dividend type return? Scott, that's an interesting question. Okay. $1 million would give you what, 10 grand a month, 10 grand a week? That's 40 grand a month. Okay. Now, funny thing. Here's a funny story. You want to hear a funny story? It's actually kind of a sad story, but it's kind of a funny story. My niece won $15 million in a scratch-off ticket. Okay, so she went for the cash. She loses 50% right off the top. Okay, great. Now she's down to what, 7.5? Okay, that 7.5 would have set her up for life. Guess what? Girl doesn't have any money now because she's broke. Because she spent it all. How the hell do you spend that much money that fast? Okay? Now, I told her you could make $45,000 a month for the rest of your life off of that money. She didn't even ask me. Okay, I've written 14 books on personal finance and investing. Did my niece even ask me about anything? No. She said, no, I'm okay, I'll do it. She's broke now. Anyway, so, yeah. It all depends on what you want, Scott. Okay? Now, do you want to just collect the dividends and just, you know, $1 million, you can give that to a market manager, money manager, and they'll give you 4%. That's 40 grand a year. Now, is 40 grand going to be able to take care of all your bills? Probably not. But I tell you what, $1 million at 1% per week, that's $10,000 a week. And if you can't live comfortably on $10,000 a week, you got a spending issue there, buddy. That's just my opinion. Okay, what do I know? All right, but anyway, yeah, I would, if I had $1 million, I would do exactly what I'm doing now. You know, buy good quality dividend stocks, sell the options off on them, and just grab that 1% per week. But that's me. CP, Copilot, just found. Do I ever trade spiders? No, I don't. Macy's, good, love it. I looked at Lowe's this morning and didn't do it. Chaz, good evening. Well, let's take a look at Grandiose at Lowe's, because I like Lowe's. And I think Lowe's actually looked good this morning. L-O-W. Whoops, let's try it again. L-O-W. And there you have it. Look at that. Now, we did look at Lowe's this morning. I don't know if anybody in the trading group actually bought Lowe's because it did look good. All right, so $217.99. We're looking at the 217.50s right here. 211. That's not quite 1%. But it's going from 211 to 221, so you might be able to get your 1% out of there if you did a limit order. All right? We'll look at the stock. Okay? First thing I want to see. Anytime I look at a stock chart, there's 5 things I want to see. You're going to see a lot of 5s because 5s is easy. Okay, first thing I want to see, where's the high? Where's the low? Where was it a year ago? Where is it now? In which direction is it going? Great. That's just the 1-year chart. That's the simplest one. Okay, and first thing I want to see, high, low, was, is. It's not at a high, great. It's not at a low, great. It's somewhere in the middle, someplace that Lowe's has been before. Okay, Anonymous, O is a good stock for monthly dividends. O is not a good stock for monthly dividends. We went over O already. O is only paying a 5.6% yield. Why would you possibly put your money into something giving you 5.6%? You give it to the government, they're giving you 5%, and there's no risk whatsoever. Okay? But O is paying 5.6%. So what if they're giving you a couple of pennies on a monthly basis? It's still 5.6%. I'm showing you how to get 1% per week. Now, where I went to school, 1% per week is over 50% per year, and you're telling me O at 5.6 is a better place? I'm going to have to disagree with you. Thoughts on EGBN? Like, I can tell you no now, or if I can tell you no later, EGBN. Is that right? EGBN. Nope. So no. Why? 2 reasons. Number 1, it's a monthly. Okay? I don't do monthlies. They just don't pay. Now, there's 9,567 companies. Okay? There's 300 of them that have weekly options and 20 years of increased dividends. I have never even heard of EGBN. Eagle Bancorp. Never heard of them. I've heard of Bank of America. I heard of Wells Fargo. I heard of Capital One Finance. I've never heard of Eagle. Why would, oh, wait a minute. Let's check and see what the dividends are like. EGBN. EGBN. Okay, EGBN paying 10% yield. That's wonderful. That's a hell of a lot better than 5.6 on old realty. Okay, so let's look at historical data. First thing I want to see in historical data is what are the dividends looking like and how consistent are they with increasing them. 2005, 2006, 2007, 2008. Okay, nothing 2009, 10, 11, 12, 13, 14, 15, 16, 17, 18. Nothing for 10 years? Sorry, dude. It's going to be a no. Look. Okay? They started paying dividends in 05. Great. And when they got to 08, they stopped paying dividends for 10 years. And then they just started paying in 19. Okay, so, sorry, but that's going to be a no. That's a no. Sorry. EGBN. And it's a monthly. Okay, it's a monthly. That's a no. And the dividends, no. Sorry, dude. Anonymous. I agree with the moment I'm a day trader. I'm eventually will invest in dividend stocks. Cool. Okay, now, Anonymous, I did try day trading. Something about sitting in front of a computer all day didn't thrill me. Okay, you miss your children's lives. My grandson's 4. I actually enjoy going hanging out with him, watching Disney movies, having peanut butter and jelly, and have cake. We had cake and ice cream for breakfast the other day, and we went swimming in the pool. Hey, it all depends on how you want to do it. Act. What was that called you were explaining? Uh-oh. Covered call? That's the only thing I can think of. CP. Way Regions Bank stay far away from the chart is especially atrocious on this one. Okay. Okay, thank you for the info. Blah, blah, blah. Just followed. Good morning from here. Parashika. What? Parshanika. Parshanika? Is that right? Parshanika. Did I say that right? I don't know. Well, good morning to you too. I'm late. What's the stock? Well, we were just looking at EGBN and it was a big fat no. Anonymous. Remember to order the sell covered calls. You have to own 100 stocks. Oh, 100 shares of stocks. Yeah, you're right. Hey. Dimone, all right. Oh, 49 more questions. Holy double cow. Macy's pay good. Yep. Mara, twice is that. Florida girl, too young, had too many friends. Yeah, I had the same thing. Jimmy, do you place an order before earnings or afterward? I don't even pay attention to earnings, be totally honest with you. Okay, I've seen positive earnings where the stocks go down. I've seen negative earnings where the stocks go up. I don't really pay attention to earnings. Now, I do like earnings. I like the after effects of the earnings because if it's a bad earnings, the market maker is going to drop and take advantage of everybody. Okay, now I've done that many times. You show you what the market maker is actually doing. It's got nothing to do with the company. So the company's losing a few pennies here and there. Not a big deal. Anywhere to buy your books aside from Amazon. All right, Nielsen, if you want to just wait a couple of weeks, they will be available on the website. Right now, I'm still in the process of upgrading the website. Narok, that's a risk certainty. Select tries, miss those stocks. You can also, okay, whatever. A protective put to limit max loss. Yeah, I don't do puts. Okay, because I always go back to rule number 1. Okay, never buy something you don't want to hold long term. Now, when I say don't buy something you don't want to buy long term, make sure you know who the company is. What do they do? What are their earnings like? How long are they consistently profitable? Do they pay dividends? And if so, how consistent are they on their increasing of the dividends? Okay, what are the profit margins? Okay, are they in for any losses? Are there any major lawsuits? These are things. This is your money, people. Okay, you've worked for this money. You should have some kind of idea what companies you invest in. Now, there's one list, I don't even question it, and that's Warren Buffett's list. Because Warren Buffett does a very good job of analyzing anything that he jumps into. So I have a philosophy. if Procter and Gamble is good enough for Warren Buffett, well, it's good enough for me. I don't need to dissect everything about Procter and Gamble, because my assumption is Warren Buffett already did that. Okay, if it's on his list, if he owns it, well, it's got to be a good company. I don't bother with that one. But what I do bother with are the lists that are not on his. Okay, so if it's not on Warren Buffett's list, like Cisco, J.P. Morgan, General Dynamics, Lennar, those aren't on Warren Buffett's list, but I do take a look at what the profit margins are. How consistently are their dividends increasing? You know, the information that you need to know before you buy something. Okay, remember, rule number one, never buy something you do not understand or you do not want to hold long term. Okay, so I don't worry about losses, and I don't worry about, a put for insurance in case it goes down, because I wouldn't have bought it in the first place if I didn't like it. You need to be careful because the stock may go up and you will be obligated to sell your call. Well, that's the anonymous. That's exactly what we're doing. Okay, if I'm buying something, where are we? We're at Macy's. We're looking at Macy's at the moment. Okay, Macy's at $18.93. Okay, if I'm buying it at $19.07, I'm selling somebody the rights to buy it from it at 19. I'm getting 39 cents, which is over 1%. The 19.50, that's 21 cents. That's over 1%. Okay. Either one of those would work out fine. Maybe even 18.50 would work out fine. No, it wouldn't. Sorry, the 18.50 won't work. But the 19 and the 19.50 both are over 1%. Great. If the stock goes up and somebody buys the stock from me, great. I made my 1% and I'm back into, I have all my cash back again. That's a perfect world. That's what I love. Kaylee. Guardiola. Cool name. All right. Wow. Paid better. 1165. Not quite sure what we're talking about. Mara. Yes, Mara is on the list. Hey, Mr. Kardashian's here. So, you're selling calls. Do you ever start the position by selling a cash secured put? Not on this page, not on this strategy. Okay? Now, I have 6 different accounts. I'm sharing with you for free. No catches, no gimmicks, nothing. Giving you all the information you need. This strategy makes 50% per more a year. 50% or more a year. Okay? Now, if you think I'm giving this away for free, what do you think I have up my sleeve that my paying customers actually get to have take advantage of? That's a question you need to ask yourself. All right? So I don't do cash. Well, I do, but not here. And I don't teach them here. There is no zero risk strategy. You just have to stack odds in your favor. CP, I'm going to agree with you and I'm going to disagree with you. Okay? Here's the reason why I disagree with you. Now, when you say there's no such thing as a no-risk strategy, well, you're kind of right and you're kind of wrong. Okay, so this is the way I look at it. Now, I was born in 1964. Okay? It is now 2024. Coca-Cola has been selling Coca-Cola for over 100 years. I don't see them going out of business anytime while I'm alive. So to me, that's no risk. Okay? Pepsi, same thing. Do I see Pepsi going out of business? What is the chances of Pepsi, Coca-Cola going out of business? What about Procter & Gamble? They've been in business over 100 years. What about Capital One Finance? They've been in business over 100 years. AIG, over 100 years. Bank of America. I can go on and on and on. Okay, you have companies that have been in business since the 1800s and consistently increased their dividends year after year after year. So let me just give you a quick little history lesson. Since the 1800s, we've seen World War I, we've seen World War II, Vietnam, Korea, Afghanistan, Kuwait, Bay of Pigs, the crap that's happening over in the Gulf. We've seen we've seen the stock market crash. We've seen the Great Depression. We've seen the oil embargo of the 70s. We've seen so much crap And you think this is the only dollar that we have seen since the 1800s? No, we've seen other dollar bills before this current one. Yeah, so everything you're seeing now, we've seen a whole shitload worse in the past. The Great Depression, the stock market crash, World War I, World War II. We are in a freaking wonderful place at this moment in time. So when you say you see no risk, well, you see risk. Yeah, risk is everywhere. You stay in bed, well, you risk missing out. If you go out of the house, you risk getting hit. There's risk everywhere in life. But what I don't see Coca-Cola closing up shop. I don't see Ford closing up. Home Depot, Lowe's. Well, not at least as long as I'm alive. Okay, well, Coca-Cola's been making Coca-Cola for over 100 years. I'm pretty sure they're going to do it in the next 15, 20, 30 years. The day I die, which who knows when that's going to be, I'm pretty sure Coca-Cola will still be making Coca-Cola. So where's the risk? The risk, in my opinion, comes in when you guys got to take personal accountability for your own actions. If you buy something and sell it and you lose money, well, that's your own damn fault. I don't see Coca-Cola going out of business. I don't. Same with Ford, General Motors, AIG, Bank of America, Wells Fargo. I don't see any of those companies going out of business as long as I'm alive. So I don't see what you're saying about the risk. Thoughts on Coca-Cola? Wow, I was just using them as an example, but Coca-Cola pays terrible premiums. If you're okay with 25% a year, sure, fine. Take a look. Coca-Cola, 63. The 63s are going for 38 cents. See, that's only 0.5%. But 0.5% is still 25% per year. If you like Coca-Cola and you're okay with getting 25% a year as opposed to 50% a year. Okay? Now you'll find the companies that are old, that have been around and seen a lot, the premiums aren't as good. Now Macy's has been around for over 100 years, but their premiums are great. Nordstrom, same thing. Kohl's, those premiums are good. Well, I only got 4 questions, then we can go on. Okay. Can you look at Lockheed? They paid me out pretty well this past month. LMT. Now, 461. It's going for 467, so we look at the 468. It's the closest one they're going to have, 467. Yeah, that's going to be a big fat no. The premiums are actually horrible. See, the 461s, even at the 460, still not getting you 1%. Okay, the last trade, 461.76. But the bid, 461.76, the ads 467. Yeah, you do the 467, you're getting 90 cents to $1. That's 0.25%. Now, what if it goes down? Okay, Alan, let me repeat. Rule number 1. Ready? Rule number 1. Never buy something you do not want to hold long term. If you think you're going to buy something that's not going to go down, you just might as well quit now and go away. Because that's all stocks do. They go up, they go down. 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 Up, down. That's all they do. They do not come to your house, wash your car, do your dishes, make your bed, put little candies on your pillows. No, they don't. They go up, they go down. That's all they do. So what if it goes down? If you're worried about going down, don't get into the game. That's all they do. They go up, they go down, up, down, up, down. I've never, ever seen a stock go straight up. Never. They go up, they go down. They go up, they go down. That's all they do. If you're worried about going down, don't buy it. Lockheed Martin. Okay, here's the numbers. The numbers is 0.25%. If I do a covered call on Lockheed Martin, I'm getting 0.25% for the week. That's only 12% per year. Are you okay with 12% per year if you really like Lockheed Martin? Okay, Lockheed Martin, it's on my list, but I never buy it because number 1, it's more than I want to spend. I don't want to go $250 over. Okay? Hassan Pfeffer, how do you do trade of buying stock and selling call at the same time? Please explain. Okay, well the platform I'm using is brain fart. Think or swim. Sorry, think or swim for Charles Schwab. Okay, on the option chain, right? On the option chain side, let me go to one I actually do because I'm not going to do this one. Let's go to Macy's. I like Macy's. Macy's has always treated me right. First, First thing I want to do is I want to change the option chain from single to covered stock. All right, that changes everything. All right, so now I look at this price that I like. I like it at 19. So here's the 19 right over here. See, here's the 19. Then I want to come over and I want to buy it. See, the little icon right there says buy. All right, I want to buy it, and it's 1868. So I click on that. It automatically fills the trade for me. I come over here and I change how many I want to buy. Do I want to buy 1,000 shares, 500 shares, 400 shares, 200 shares, 100, however many you want to buy. If you're just starting out, do 100 at a time. Okay, don't do 1,000. Okay, that's what I do because I've been doing it long enough. All right, so it automatically fills, and then you read it. Doing 2 trades at once. I'm buying the stock. I am selling the option. Okay, 12 July 24. That's this Friday. Okay, the call option, the stock. The price, the debit, limit order. I like doing a market order when I'm doing them together. Okay, when I'm buying a covered call, buying the stock and selling the option at the exact same time, I like market because it fills instantaneously and the numbers are already connected together. Okay, otherwise, if I'm just selling a covered call, I'll do a limit order because I don't trust the market maker. All right, so there's that. Then I go to confirm and send, and then I read the trade to make sure it is what I want it to be. I am buying 10 covered calls on Macy's 100s, those are the weeklies, 12 July 24, that's this Friday, the $19 call in the Macy's at the market to open to open. To open to open means I'm opening up a stock trade and I'm opening up an options trade, okay? So anytime you do a trade at all, you're opening it and eventually you've got to close it. Okay, so if you're buying to open, you're gonna have to sell to close. If you're selling to open, you're gonna have to buy to close. Either way you look at it, you're buying something, you're selling something. Doesn't matter which direction you do it, as long as you're opening a trade and then eventually you have to close the trade. All right, so that's the trade. Here's my break-even point right there, 1859. The max profit's 410. The max loss is what I'm actually paying for it. Okay, and the buying effect, if you're doing it on margin, blah blah blah, all that's nice, neat, fun stuff. Okay, so hopefully that explains it. Get everything set back to the way I like it. All right, make it easier for people to understand. How do we follow you once subscribed? Chip. Is that Chip or Champ? I don't know. I can't read that. User 90, 25, 31, 56. Hut, hut. All right, Mara has dividends. Yes, it does. Mara is on the list. Okay? We might not get to it tonight because we have so many other ones that are on the list before Mara. Okay, focus on dividend depends on the profitability of the company. Well, that just makes sense. I mean, think about it. It depends on the profitability of the company. Why? I mean, you think about it. Why would you put your money into a company that's not consistently profitable? I mean, that's common sense 101. If you're going to take your money, now your hard-earned money, you work, yeah, I've been working since I'm not going to go there. I've been working since I was 13, okay? 13, I got my first job, okay? Now, I've been working all this time. I get a certain amount of money. That's it. That money's put aside. I make 1% off that on a weekly basis. That's enough to cover my bills. If you're investing your money, why would you invest your money in a company that's not consistently profitable? Okay, if you're looking for capital appreciation where you buy a stock and you hope that it goes up through the roof, you're in the wrong place. Okay, this is not for you. This is slow. This is methodical. This is boring. This is snail pace, turtle pace, really slow. Okay, I look for 1% per week. 1% per week is not that much. So let's take a look at Macy's. Okay, well, we already looked at Macy's. Look at something else. All right. When the call expires at the end of the week, what do you do next if it doesn't sell? Well, here we go. All right, let's take a look at Caterpillar, the 19th. All right, if I wanted Caterpillar, let's see what's Caterpillar paying. All right, 130. What is Caterpillar going for at the moment? CAT. 330. All right, $330.17. The 330s are going for 285. That's not 1%, but let's just use it as an example. Okay, we'll just use it as an example. Okay, let's say I buy it tomorrow morning at 330, and I sell the 330 call option right here, giving somebody the rights to buy it from me anytime between tomorrow morning and Friday's close. Now, I would like it to be 330 or higher. Okay, here's our high for the year. She came down, bounced back, down again, bounced back, down again, bounced back, down again, bounced. Here we are right here. No rhyme or reason to where it's going next. I have no idea. It's really not that clear. Okay, look at the 30 days. More than likely, here's your 30-day high, 30-day low, comes up, pulls back, up, pulls back. Here we are. More than likely, it's going to come down. More than likely. But let's say hypothetically, all right? I like the 330s. I want to get in on a Monday or a Tuesday because that's where the premium is the highest. All right? Now, if I buy it at 330 and I sell someone the rights to buy it from me at 330, if Friday comes and it's higher than 330, well, I will get all my money back again, and I'll have all my money back on Monday, and I'll be looking at Ford, Lowe's, Bank Mellon, Pfizer, or Kimberly-Clark. But let's say hypothetically, she's at 329.95. Well, that's below 330. I still keep the premium because that's mine, right? And then here we are at 329.95. So I sell the 330 again. What if it's not above 330? Well, I sell the 330 again for the third time. So premium, 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 dividend. So premium, 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 dividend. So that's tripling or quadrupling my returns. Okay, so I like Caterpillar. Okay, I'm buying it at 330. If I hit 330, great, I got my 1% and I'm back into cash. Now I have all my cash to buy something else. Will I do Caterpillar again, that close to the dividend? Probably not, but it depends on the numbers. What is the 330 going to go for this week? Okay, what's the 330 going to go for this week? And then I collect the dividend. So it's premium, 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 dividend. That's 4. Not just the dividend. Most people buy the stock just to collect the dividend. No, not me. I buy the stock 2 weeks before. Get a premium, get another premium, and collect the dividend. And if I want to keep Caterpillar, I'll keep Caterpillar. Why would I buy a stock I don't want to hold on to long term? That's the question. That's the argument. Why buy something you don't want to hold on to long term? If you don't like Caterpillar, if you don't want to say, hey, I like Caterpillar, let's buy some Caterpillar and hold it until we die. If you can't say that about anything, don't buy it. It is actually that simple. Cisco, JP Morgan, MasterCard, AbbVie, Procter & Gamble, any company here on this list, these dots, this is my personal list. I have no problem whatsoever buying any one of those and just holding on to them forever. I don't want to, but I have no problem with it. Okay? I just told you what I do. Bank Mellon, 27. I would buy it on the 10th. Okay, if I buy it for $27 and it hits my 27, great. I got my 1%. Thank you very much. I'll see you again in 90 days. Why? Because Caterpillar, Bank Mellon, every 90 days, they pay a dividend. And I do this exact same thing every 90 days. Look at, where are we? Okay. This right here is the first week of the third quarter. Look, Comcast, Cisco, JP Morgan, American Express, MasterCard, all these other ones. The first week of the third quarter, that's where we are right now. Guess what? It's going to be the exact same the first week of the fourth quarter. Okay, the first week of the first quarter, first week of the second quarter. Always, 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 always the exact same stocks. The second week of the quarter, always the exact same stocks. The third week of any quarter, first, second, third, or fourth, always the exact same companies over and over and over again. I don't look at anything new because the only way I'm going to look at something new is if a company's at 19 years of increased dividends, and next year they're going to be at 20 years of increased. Great. Now they can be on my list. Now I'll take a look at the numbers. Okay, what steps do we do? What steps do we do to get a dividend plan you use? Well, that's very simple. I think I just did that. Mr. Kardashian, you want to take a look at Mickey D's. Mickey D's is on the list. Actually got 4 more stocks to go to get to Mickey D's. So it's pretty simple. I know you're new here, okay? So just come back every night. Just watch everything I'm doing. And if you're ready, when you're ready, join the morning trading group. The morning trading group, you get to watch me trade live every morning, Monday, Tuesday, Wednesday, Thursday. We trade live every single morning. I do a podcast. Where is that damn thing? Oh, right here. Okay, here's my, what do you call those damn things? Social media. YouTube, Twitter, Facebook, Instagram, podcast. There's a go, podcast. All right, it's popping up. There you go. Dividend Stock Talk. Look at it. That's me again. Yay! And then you float all the way down. There's over 900 episodes. Okay. I'm not perfect with it. Every once in a while, some of the recordings might not work right, but for the most part, they're there. No new positions this week, but I did make my 1%. I just love Fridays. Looks like only Macy's this week. Carrying more than I should. Oh, picked up Macy's again. What's going away today? Okay, so on and so forth. There's over 900 episodes. I podcast every trading day. Okay? The live trading is done after the podcast. I do the podcast first 15 minutes of the open show. Then after that, it's open to any questions you want. Most of the time, people just watch what I'm doing and do the same thing. But it's your responsibility to take a look at what I'm doing. And does it make sense? There's a question you got to ask. Do I like Comcast? Do I like Capital One Finance? Do I like General Electric, Ford, Lowe's, Caterpillar, Procter & Gamble? Those are the only companies I do. Okay, I will look at Caterpillar 4 times a year. I will look at Comcast 4 times a year. I'll take a look at Ford 4 times a year. Lowe's 4 times a year. The same companies over and over and over again. Okay, let's move on. 53 questions. Oh my goodness. Mara doesn't have dividends. It's an exception that he consistently trades. Yeah, sometimes when Warren Buffett's lists come up, sometimes you'll see some of them don't have weekly options, and sometimes some of them don't have dividends. But if it's on Warren Buffett's list, I let it slide. Now, Apple, it's not on my list. I trade it because it's on Warren Buffett's list. Siri is not on my list. I trade it because it's on Warren Buffett's list. All right. Oops, I'm missing a question. That's cool. Thanks. All right. Would you buy stocks that is a monthly option, but the monthly is only a week from expiration? Just no. Because if I'm wrong, okay, I have to carry it for 4 weeks after that. Okay, I hear what you're saying. Okay, but there's 300 companies that have weekly options and increased dividends. All right, so if I don't find anything in that 300 companies, then I might think about it. But I don't think I run into that scenario that often. King, he won't do it. Oh yeah, thanks 86, basically. Because if the shares aren't called away, I don't have to wait another month. Yeah, I do not want to do a monthly thing. I just don't do it because the numbers just don't work. And trying to figure out where it's going to be in 5 days is hard enough. Can you imagine where's it going to be in 4 weeks? Yeah, no. Do you compound interest with value and growth stocks at all? Chicken nuggets are. All right, chicken nuggets. I love compound interest, okay? But I'm not 100% sure what you mean by with value and growth stocks at all. I don't know what you mean by that. The only stocks I look at are those companies that have increased their dividends for 20 consecutive years or more. Okay, it's the Dividend Kings, the Dividend Aristocrats, Dividend Champion, Dividend Contenders, Warren Buffett's list. Those are the only 4 lists I look at. Or is that 5? That's 5 lists. Those are the only 5 I look at. There's 9,567 companies last time we checked. Out of all of those, 97% of them I have no desire to look at. It's nothing but a waste of my time. Now, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trade, means I only want to be doing this for 10 minutes. That's it. I get in. See, I'll give you an example. Let's take this week right here. General Electric, AbbVie, Abbott Labs, Hormel, PNC. All right, I'm going to breeze through them really quick, and you see exactly what I do. Because I don't spend a lot of time, because I've already looked at the statistics of the companies. I've already looked at the fundamentals. So they're on my list, so it's never, do I like this company? Yes, I do, because it's on my list. Okay? I don't look at other ones, all right, only because I find them to be a waste of my time. So I've been doing this long enough. If there's a company that's increased for 20 years or more and has weekly options, 99% of the chance, 99% of the time, I know who it is. Do you mean you sell covered calls or buy? I'm confused. Jimmy, I sell covered calls. I buy the stock, I sell the option. There are no broke bankers. Alrighty then. I sell covered calls, yep. So pretty much you only sell for profit, and if there's no profit, then you hold the stock. No, Sheila, that's not it at all. Okay? Number one, I only invest in profitable companies. That should be a no-brainer. Only invest in profitable companies. That's number one. Number two, let's pull up another one. You guys are probably, nope, that's a no. That one's a no. Let me find another one. Lowe's. Yeah, all right, that will work. All right. Now, Sheila. Okay, what I am doing specifically, I'm taking a dividend stocks. I'm looking at when they pay their dividend. That's the first thing I want to know. When are they paying? Because stocks have a tendency to move up in value before the dividend is paid out. Now, stocks only move for two reasons and two reasons only. One is a known reason, things we can plan for, okay? Two is an unknown reason. Well, what's an unknown reason? Well, news, that's unknown, we don't know that. Bankruptcy, that's another unknown. Lawsuits, that's an unknown. Natural disaster, that's an unknown. Death of a key employee, that's unknown. Okay, we can only react to unknown reasons. That's all we can do. We can react to the news. That's it. What are known reasons? Known reasons are dividends, earnings, seasonality. What do I mean by seasonality? Well, why does Hershey's goes up in the first week of February? Why does Weight Watchers go up in the first weeks of January? Why do Google go down the first weeks of January? Why does Apple go up in the third and fourth quarter? Certain stocks react differently to winter, spring, summer, fall. Okay? That's a known reason. So, if we know the dividend is coming up on any one of these stocks, and we look 2 weeks before the dividend, because remember, these companies have been consistently paying year after year after year. Okay, you can basically set your clock by it. Actually, the first book I wrote was How to Get 10 to 20 Checks Per Month Like Clockwork. Dividend capturing. Okay, because it tells you exactly when the dividend's coming. If you buy the stock before the EX date, you're entitled to the dividend. Great, capture the dividend, move on to the next stock. Okay, but this is even better. So I look 2 weeks before the dividend on a Monday, I buy it at the money, I sell a covered call against it, the safest trading strategy there is, buy low, sell high. Okay, if I'm buying low, when the stock comes down, look, it goes up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. Well, that's the 1 year chart. What is that telling me? Well, it's telling me what it's done for the year. Well, that's not going to do me any good for the next 4 or 5 days. Well, I want to look a little bit closer. So a year ago, we're at 226. Bottomed out at the end of October at 182. Topped off at the end of March at 261. So what's happened since 261? Hate when that happens. Okay, so here's the high right there, 261. Okay, high, low, where was it? Where is it? Which direction is it going? Great, but that's the last 90 days. It doesn't really tell me about the next 4 or 5 days. Because I want to be in the morning and I want to be out by Friday afternoon. Great, well, where's it going? For that, we need the last 30 days. Okay, that gives me a better idea. Look, okay, here's your high, here's your low, here's where it was, here's where it is, this is the direction it's going. Great, 30 days ago, we're at 225. She shoots up to 230, you got your profit taken, that's a big profit taken, okay? And then she bounces off of that, comes back down, here's our 30-day bottom, right there. You cannot argue with the numbers. 30-day top, 30-day bottom. I can get a third grader or a fourth grader in here and do the exact same thing. Where's the high? Oh, it's right there. Where's the low? It's right there. Where was it 30 days ago? Right there. Where is it now? Right there. Okay, so great. 30-day high, 30-day bottom. It's bouncing off the bottom, 2 days to the upside. That's a freaking invitation if I've ever seen one. Okay, so what am I getting? I'm buying it at 117.99. That's 118. Sorry, 218. Okay, the 217.50s are going for 211. Not quite 1%, but okay. Now remember, just because it's not 1% doesn't mean it's not an okay trade. Excuse me for a second. I'm not used to talking so much. Oh, much better. Okay, so as I was saying, just because it's not a full 1% doesn't mean it's a no. Okay? 1% is 50% of a year, right? So what's 0.8? Well, 0.8 is like 45%. Well, 45% is not bad. And it's Lowe's. Lowe's has been in business for over 100 years. Okay, they've increased their dividends every single year for 5 decades or more. They've got a dividend coming up in 2 weeks. Well, yes, 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 and yes. Okay, the 1-year chart's okay, 90-day chart okay, 30-day chart, look. She goes up, she goes down, she's bouncing off the bottom, great. I like the odds and probabilities in my favor. So let's take a look at the seasonality. Now, what's the seasonality, you may ask? Well, the seasonality is basically the blue line, January 1st to December 31st. The blue line represents the movement for this year. The red line down here represents 10 years of movement based on historical performance. That's a 2014, 2015, 16, 17, 18, 19, all stacked up on top of one another to give us an average. What's the average movement? Well, we're here. This is the area I want to see right here. And it's pretty plain to see that it's an upward trend. So let's go from where the blue dot is right there. The next couple of weeks, there you go. Put my crosshair right there. If you can see where the crosshair is today, right here, the 15th, she goes up, 22nd, up, 29th, up. So we're into August. She's in an upward trend. Okay, not huge upward trend, but we're talking about a company that's 100 years old. Okay, so I like Lowe's. Granted, it's not paying 1%, but hey, it is what it is. Okay, so Sheila, the profit that I'm looking for, I'm not looking for the profit in the stock price. All right, this is where you get a little distracted. All right, I'm not looking for the stock to go from 217 to 224 to 228. I'm not looking for that. I'm looking for it to stay exactly where it is, not move at all. That's what I'm looking for, because I don't care about the stock price. Okay, I do care that it's bouncing off and heading to the upside. That I do care about, but I don't care if it goes up, because I'm buying it at 218 and I'm selling it at 217.50, collecting this premium. This is what I'm collecting. This is my profit. Okay, so it's 0.85. Okay, 0.85 is still over 45% a year. Okay, I'm looking for the premium. I'm not looking for the stock appreciation. Okay, I don't want to buy the stock if she's in a downturn. No, I don't want to do that. I want it to go 30-day high, 30-day bottom, 2 days to the upside. That's perfect for me. And that's for me. You have to figure out what's right for you. But for me, that's perfect. All right, we're at 11 o'clock. We got 41 questions. Oh, sorry, guys. Let me see if I can get to these. Thanks, 86. Makes it easier for me. Let's do this. String cheese it. Back again. Jolly, how's it going? Jolly, I'm doing awesome as usual. Share Rome. Be careful. What are we sharing? What are we being careful about? There is someone using your name. Dude, there's 27. We found a couple more today. Okay, now I find it kind of flattering, but all right, so there's 160 people here. You guys got to be aware that there are 27 other people pretending to be me. They're using my pictures, they're using my videos, creating a website that says, Dividend Stock Talk. The spelling is usually incorrect. Okay, and they'll try to send you an email and say, hey, I got something great for you. Well, here's a few things. Number one, you really want to talk to me? DM me your phone number. I will call you back. Okay, you can actually ask here in the chat, say, does he call? Yes, I do. Number two, I don't do cryptocurrency. I don't do Forex. I don't do futures. I don't use WhatsApp. And I don't use, what's that other one? Telegram. I don't do that either. You want to get in touch with me? It's here. Here's where you get in touch with me. Either here or my website, The 10-Minute Trader. Okay, so just to let you know, there are people out there pretending to be me. And there have been a few people that have emailed me, asked me why did I cheat them out of money. Well, I didn't, and I don't. I don't ask for money. Okay, if you want to join my group, fine. You join the normal way, same way everyone else does. You want me to trade for you? Fine. You actually have to fly to Florida to meet me, and I have to be okay with you because I don't trade for everybody. Okay? Like it, don't like it, doesn't matter. There should be analysis of companies' finance to make but decision. All right, Alan, I'm going to agree with you 100%. But then I'm going to disagree with you also. Because this is why I'm going to disagree with you. Okay, this list right here that you're looking at, Globe Life, American Express, MasterCard, Bristol Myers Squibb, Verizon, Mandalese, US Bank, Procter & Gamble, blah, 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 all those other ones. That's on Warren Buffett's list. So if you think I'm going to actually question Warren Buffett on his choices of his stocks, you're don't take it personally, but you're nuts. Okay? Why would I double check what Warren Buffett already approved? If Warren Buffett thinks MasterCard, American Express, and Globe Life are good companies, well, I'm not going to disagree with them. But I will agree with you on these companies here. Now, these are my own personal choices. Okay? I have already looked at the numbers. Me personally. This is my personal list. Okay? My personal list. I've looked at every single one of those companies. That's why they're on my list. So when it comes time to look at Procter & Gamble, I don't have to go in and check the numbers, make sure it's an okay company. I've already done that. See, but I understand what you're saying. So for you guys in the audience, you need to create your own lists. Okay? Now, I'm saying Dividend Kings, Dividend Aristocrats, Champions, Contenders, those. Okay? But check the companies and make sure it's a worthy company of you investing your money. That's where your responsibility comes in. So I'm going to agree with you there, Alan. Okay? But when it comes to Warren Buffett's list, yeah, I'm not even going to check it. I think Warren Buffett's a better trader than me. Well, he may not be a better trader. He doesn't get the rate of return that I get. But he does it differently. Thoughts on ECU? Should I tell you no now or later? It's not even foreign currency. Yeah, that's a no. That's a no. Sorry, Brendan. Share Rome. Awareness with fraud profiles. They are scamming people, messaging him directly through here. Yeah, I get that. Okay, that's why I always tell people, be leery of people asking you for money. I don't ask for money. I don't. Okay? And when I tell you, if you want to get in touch with me, send me your number and I'll give you a call. You can actually put it here in the chat. Does he really call? And you will get a lot of people saying, yes, he does. What time in the morning? Sheila, I have no control about that in the morning. The stock market opens at 9:30 a.m. Eastern Standard Time. I jump in a half hour early so that we have everything all set up and ready to go before the market opens. Will Nvidia go sideways for 3 months? Hakuna, I'm ignoring you on that one. You know better than to ask me that stupid question. Uh-oh, I'm missing a bunch of questions. Hey, RJ 30 pack, how's it going? All right. Charlie, that hurt. Okay, I'm not even going to question where that name came from. You want to look at Nike. Nike is on the list for us to take a look at, but where the heck is it? Yeah, it's got a long way to go. We're not going to get to it tonight. Sorry about that. And we got so many other ones to go fight, and you guys keep hitting it up with all these questions. Covered call is you own the stock and you sell someone the rights to buy your shares at a certain time at a certain date. Everything is low now, need to buy. Well, always be leery of that situation. Okay? CMG, he screens his list, 300 quality companies, and enters, yep, thanks 86. Lowe's, Caterpillar, and CVS. Haas and Pfeffer, yes. We looked at Lowe's, we looked at Caterpillar, and CVS we haven't looked at yet, and it is not on the list. Okay, we'll put it on the list now, CVS. All right, CVS is on the list, we'll take a look. All right, why do you look at 90-day chart? What do you look for? Felix, awesome question. Okay, so here's AT&T. This is the 1-year chart for AT&T. What can you tell me by looking at it real quick? Besides the high, low, where was it, where is it, what direction is it going? Okay, that's the 5 things I look for. Okay, does it give you any indication whatsoever where it's going next? Kinda. It looks like it's going higher. Okay, I don't buy at the high, so this one's going to be a no. But why do I do 90 days? Okay, well, here's the 1-year chart. This is the 90-day chart. It has a different view, all right? So what, as the buyers and sellers, that's you and me, what have we been thinking over the last 3 months? Well, it was here, she dropped down in a slow increase to where she is now. No big moves, just a slow, steady increase. Do you see that? There are other stocks that look totally different. Okay, this is the 90-day chart for Macy's. Short bursts, down, up, 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 down, up. Quick, short bursts. Okay, AT&T. Slow progression to the upside. That's what I'm looking for in the 90 days. How are the buyers and sellers reacting to the stock? James, can we do a business together? I have an idea, a great one. Hakuna, send me a text or send me a DM on TikTok. Because I don't really do DMs on Instagram. But yeah, I'm willing to listen to something. Okay, so little under the weather today. Me, yeah. I got that cold a couple of weeks ago and just doesn't want to shake. Secretariat, James, just sharing, I just released research WBA closures and multiple sources sites say 25% of U.S. stores. Wow. That's a lot of freaking stores because they have 8,500 stores. The report that I read was 450 they're getting rid of. 150 here in the U.S. and 300 over in the U.K. Okay, maybe there's more. I don't know. Tim Wentworth must have said so in his recent Wall Street Journal article. Okay. I have no idea who Tim Wentworth is, but all right. 2 weeks before the dividend date or the EX date. Correct. On a Monday. Okay, Mr. Hankey? Your residence. Yay! I just want to warn this group. Yep. Okay. Now, I got no problem with that whatsoever. Now, I will do some research tomorrow to find out what kind of answers we're getting because, well, you know what? Let's go to Yahoo Finance. Why not? Let's find out what Yahoo Finance has to say. WBA. News. Here we go. News for WBA. Yep. Should you buy the first half work week from? Why Walgreens Boot Alliance plunged in June? Okay. Okay. Analysts describe new Walgreens stock price target after earnings. Nothing. Late afternoon. Walgreens facing persistent retail pharmacy headwinds. Blah blah blah. Walgreens strengthens support for children and adult living. Blah blah blah. All right, it's not giving me crap. All right, how many stores is Walgreens closing in 2024? Okay, good housekeeping. Walgreens closing thousands of stores by 2027. Walgreens to close 25% of its roughly 8,600 stores. Okay. CNN. Walgreens will close a significant amount of stores. Walgreens is set to close a substantial number of 8,600 stores in the United States. Okay. USearch. List contains 108 stores. Okay. This one says Walgreens will 25% roughly. Here at 91. A significant portion. 87. Yeah, I'm getting all different kinds of news. Some companies saying 8,700 stores, some saying 86. Okay, Walgreens. CBS News is 25%. Major plunge. Walgreens closing 150 stores across U.S. Okay, that was a taste of the country. This list contains 89 closed Walgreens locations. All right. So there's so many in this one. It says another one. MSN, 150 stores across U.S. And here's another one. Forbes, 450 stores. So I'm getting, okay, and here's Darius. I have no idea who Darius is. It says 900 stores by 2022. What the hell? That's an old story. Okay, and KPEL says 150 stores in 2024. There's so many different news articles. Who do you believe? Okay, so I just went down and looked at like 15 or 20 different news articles. A lot of them saying 25%, some of them saying 91 stores, some saying 60 stores, some saying 150, some saying 450. Yeah, we'll find out. But thank you for that, Secretariat. I mean, yeah, Walgreens is going to drop. It's going to continue to drop until it finds its bottom. Okay, now I read somewhere today that there's a new CEO. Well, great. Maybe the CEO will do something about this. Now, I jumped in and I bought some this morning. Okay, I don't really mind buying Walgreens. It's at an all-time low. Where do you make your most money? Well, you buy at the low and you sell at the high. 27 more questions. I'm not going to get to this list at all. You guys keep hitting me with these questions. Yeah, Mama says yes, he calls. Nope, I don't do Telegram. Oh, good. Someone contacted me using your name, and I told him. All right, be happy? Yeah. I definitely would remember if be happy if you actually contacted me, because I'm good with names. I am. Bigfoot 3000. So you're buying a call on the uptrend and selling the put option when? Bigfoot, you're totally wrong. Okay, I don't buy calls at all. I buy the stock. I sell the call. I don't do anything with puts at all. Okay, it's a simple trading strategy created for a 9-year-old. Simple, safe, predictable, consistent, no way to lose. 5 rules. Never buy something you don't want to hold long term. Never sell at a loss. Make sure there's 20 years of increased dividends, weekly options, and then make sure the numbers work. What are the numbers? Well, what's the last trade? What's the bid, the ask, the volume, the open, the high, the low, the close? What can I buy it for? What can I sell my rights away for? Am I making my 1% from the premium alone? Do I care about stock price? Kinda yes, kinda no. Okay, I don't want to buy it as it's continued to drop. I don't want to do that. I want it to find its bottom, turn around, come back up. Do I want to buy it at a high? No. Do I want to buy it at the absolute low? Well, kinda. I want to keep my eye on it. I want to keep my eye on we've been watching Walgreens drop, 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 drop. Eventually, the company's over 100 years old. Okay, 8,600 stores. Okay, they're closing, 25% of them. Well, great. Maybe the other 75% is going to bring the valuation up and get back into profits. If you have a store that's losing money, well, you cut it loose. Okay, you talk to the manager. They say, dude, what's going on? Your store's consistently losing. Sorry. All right, be happy. I don't PM. Well, if you want to chat with me, the only way you get a hold of me, PM me. I said DM me, direct message. Okay, James, on Lowe's, do you call July 5th a day the upside, or up to interpretation? Interesting question. Let's check it out. LOW. Well, yeah, the 5th's an up day. Here's the bottom here. Okay, that's the bottom. 1 up day, 2 up days, 3 up days. There's 3 are higher than the bottom. Okay, because here's your 30-day bottom. Your 30-day top's here, 30-day bottom. 1, 2, 3, 3 days to the upside. Michael, I grew up in Fort Myers. We're in Florida. Also, thoughts on Nike. Michael, Nike is on my list to take a look at. I actually own some Nike. When they dropped, yeah, hell yeah, I bought some of those. I'm in Sarasota. So if you're in Fort Myers, you should come up here and take me out to lunch. We can chat. I like the sushi place right off of Fruitville and the highway. Oh, I love the sushi there. Anyway, okay, Hakuna, you have to DM me. We'll chat. All right, keep going. 34 more questions. Holy cow. LVMUY. All right. Ooh, this happened to me before. Battery's low. We don't want it to... Hold on, guys. Don't go anywhere. I got to plug in. All right, so she's plugged in. Now, the other night, it was plugged in, and it's still turned off. All right, user 9223. Prefer a name, but, LVMUY. I've never heard of it. Now, I haven't said this at all tonight, so this might be the first one. MUY. No. It has no options. Okay? Doesn't even have dividends. LVMUY. Oh, Louis Vuitton. Imagine that. It's at 150 bucks. Holy shit. Okay, you ready? I haven't said this all night. What the hell were you thinking? 1.85% yield? You're putting your money into a company that's giving you 1.85. There's some CDs out there at certain banks that pay more than that. Okay, the federal government pays 5%. This company's only giving you 1.8. What the hell? Okay, sorry. You're new here because I'm good with names. I've never seen you before. But think about it, seriously. This is your hard-earned money. Yeah, you like Louis Vuitton. It's, you got a catchy name. People like to buy it. But they're paying crap. Why would you invest your money into a company paying 1.85? Seriously. There are companies out there that pay a hell of a lot more than that. It's not Louis Vuitton. I don't care about Louis Vuitton. Really don't. If they're a decent company, they pay a decent amount of money to their investors. So let's see what their dividends look like. Dividends only. For the last few years. Okay, so they've been paying dividends since 2007. They only pay twice a year, so that's once every 6 months. Okay, so it goes from 30 cents to 10 cents. That's not good. 39 cents to 9 cents. That's not good. 35 to 11. That's not good. 34 to 18. Not good. 41, 22, 48, 28, 47, 30. They're all over the place. There's no consistency in this whatsoever. Hell no. I'm terribly sorry if you really like Louis Vuitton. I mean, you got to really like Louis Vuitton because the dividends aren't consistent, number one. Okay, number two, they only pay twice a year and they only pay 1.3%. Wow. I'm sorry if I put you on the spot, made you feel bad, but in my humble opinion, why would you put your hard-earned money in a company that's not consistently profitable? They may be consistently profitable for the owners, but they're not sharing squat with the investors. 99 to 59, 47, 95, 68, 153, 103, 149, 120, 161. What the? Let me find something else before I blow a gasket. All right, let's go back to my list. KGC. Really? KGC. KGC. That's going to be a no. Why is it a no? Well, it's at the high of the year. I don't buy at the high looking for it to go higher. It doesn't make any sense. You make your money in the stock market when you buy low and you sell high. Not when you buy high and wait for it to get higher. I don't do the thing. Okay? I would have bought it down here. 30-day bottom, 2 days the upside. Right there's what I would have jumped in. If the numbers look like 850, the 850 is going for 17. That's 2%. I love 2%. Really do. Okay? 2% is 100% per year return if I could consistently get 2% every week. Okay, great. Now I've never even heard of this company before. Okay, KGC. KGC. Into the Yahoo Finance and see what kind of dividends they pay. Yeah, that's going to be a no. 2008 every 6 months goes from 4 cents to 5 to 6 to 8 to 0 to 3 to 3. And then, yeah, no, sorry. Although the numbers look good in the charts, okay, just because the numbers look good in the charts, okay, over here, these numbers look good, it doesn't look good here. Okay, it's at the high. That's going to be a no. I should have quit early. Okay. HO. What the heck is HO? Home Oil Limited. Yeah, that's a no. General Electric. Here's a winner. All right, General Electric is going to be a no also. If you look where it is. Okay. The bottom was down here at 90. Now it's at 160. That's a $70 increase. $70 on a $90 stock. That's what, 80% increase? You have an 80% increase in 7 months. All right? Yeah, it's going to be profit taking here somewhere. General Electric, they've been in business over 100 years. Last 30 days, right here. Okay, so here's your 30-day bottom, 30-day top. She pulls down, goes back up, right here. Kind of challenging to figure out where she's going to be in the next 5 days. But 163.78, we'll be looking at the 164s, which they don't have. But you should be able to get your 1% out of this one if you like General Motors. No, I'm sorry, General Electric. Sorry. See, I make mistakes all the time. What does General Electric do this time of year? Okay, here's where we are right now. Okay. Next couple of weeks, up, up, up. Okay, so the next 2 weeks goes to the upside. Great. If you like General Electric. So remember the first rule number 1. Okay? Rule number 1, never buy something you don't want to hold long term. I got no problem whatsoever holding General Electric for the long term. They've been in business for over 100 years. Okay, the premium is over 1%. Great, that's what I'm looking for. 1% or more. Jimmy, Siri. Ooh, Siri. Golden Manito? Never heard of Manito. Okay, next on our list, Albemarle, ALB. ALB. Now, just for you guys to know, ALB is the only company I've actually lost money on this year. So I've only lost money once this year on ALB. We'll take a look at it in a minute. All right, Golden Minito, I never heard of them. 95% accuracy, find out. Really? You really want to hit me with that phrase? MANITO. Yeah. No. Sorry, can't even find it. Look, it says, can't find the symbol. So let's go back to ALB. All right, back to Able Model. All right, Able Model, $99.50 a share. The closest strike price is going to be the 100. The 100 is going for 159. That's 1.5% for the week. Great. What's the chart telling me? The chart's telling me here's the high, here's the low. That's where it was. This is where it is, and this is the direction it's going. Look at this right here. You can't really see it very well, but I like the 1 year chart. Because see, here we are. We come down to this point right here. This is what I want to see. Uh-oh. Hi, one more question. What happens if Macy's sells 19? Ah, see? YouTube doesn't leave the questions up long enough so I can read. I only got 2 sentences out of that. So if you can send it again, I'll see if I can read it again. But send it to me in little clips so I can have time to read it. Remember, I got 5 monitors going here. 1, 2, 3, 4. So I got to get questions in each one. YouTube is the only one that it pops up. 2 seconds later, it disappears. Same thing with Facebook. The question will pop up. A couple seconds later, it's gone. All right, Jimmy, we'll take a look at Siri. Golden, Minito, yeah, that's a no. We're an Able Model. All right. So, 1.5%. We already looked at the chart. High, the low, where was it, where is it? This is what we want to take a look at right now. That's my main concern. Last 3 months, okay? Now, when I look at the 3 months, okay, 90 days, she went up, pulled back, up, in a slow decline. It wasn't fast, it was slow. So, how fast is the upgrade going to be? Well, it's going to be slow also. That's why I like to look at the 90-day. Somebody asked about that earlier. All right, last 30 days. Now, this is pretty plain to see. I mean, you can't mistake this for anything else going this way. Okay, here's your 30-day high. Here's your 30-day bottom. Up, pulled back, up, up. And she's going to the upside. See, look at that. Nice, smooth transition to the upside. Now, remember, the 90-day chart had us coming down really slow. So to the upside, it's going to go really slow. So I like this one at $100, Able Model. And I think I might do Able Model in the morning. ALB. I'm going to circle that one for tomorrow morning. All right, let's keep going. All right, Golden. I have no problem whatsoever taking a look at what you asked me to look at. I looked at it and can't find it. You got to get me the right ticker symbol. Okay, so if you think that's a good stock, give me the right ticker symbol, because the ticker symbol you gave me didn't work. Mikey's over here on Instagram. How's it going over here, Mikey? Tim Wentworth is the Walgreens CEO. Cool. W? What the heck is W? Wayfair. Yeah, that's a no. They don't have 20 years of increased dividends. How much of your portfolio should we tie up in a week? Okay, Copilot, I honestly can't tell you anything about your personal situation because I don't know you. I don't know what your plans are. I have no idea what your risk factors are. I have no idea what you want to do. Okay? So I can't really tell you. But I can tell you 98% of all of my money is tied up in the stock market at all times because this is what I do. All right? I don't find it risky at all because it's like if you're a horse jockey, you know horses. Okay, great. I don't. Okay? I couldn't tell you anything about horses. Okay? That's like about a nurse. I couldn't tell you anything about that either. Okay? A lot of things I can tell you about the stock market. A lot of things I can't tell you about being a lawyer. A lot of things I can't tell you about being a doctor. I stick to what I'm good at. That's my expertise. I've been watching these stocks for months. Some of them I've been watching for years. So you'll have to ask yourself what you want to do. Pickled peanuts back again, 1,500 over 3 years. Now I'm not quite sure what that means. 1,500 what? 1,500 toothpicks in 3 years? Okay, I don't know. Is Tim Wentworth related to J.G. Wentworth? I have no idea. Do you always sell at the same strike price in the following week if it doesn't get called away? It always goes about it's always about the numbers. Okay, so what I am buying this week, let's take a look at Able Model. Okay, so we're looking at Able Model. It's at 99.15, 99.50. Okay, the last trade, 99.15, it's right here. The bid, 99.15, the ask, 99.50. So the 100 is going for 159. Right off the top of my head, I know that's 1.59%. Okay, so is 1.59% a good trade for the week? Well, it all depends. Do you like Able Model? I like Able Model. Able Model is slow moving. Now, that's the reason why we looked at the 90-day chart. Okay, look at how slow moving it is. Extremely slow. All right, here's your 30-day bottom. Now look at it going up. Extremely slow. Okay, great. So if I buy it tomorrow morning at 99.50 and I sell off the 100s, okay, as long as she stays above 100 come Friday, I'll be back into cash, get my 1.59%. That works for me. Okay, if it gets called away, great. I'll be back into cash looking at something again next week. I go week to week to week. Do most of my trading on Mondays. Monday's most of my trading because that gives me the highest value for the time value of an option. Now, there's a lot of things that make up an option, okay? But make it simple. If I'm buying it for 99.50 and I'm selling the 100s at 159, that's 1.59%. I'm not going to split hairs about the other things that make it up. All right, Damon, WBA is risky. Okay, WBA, do you have huge amount of stores in dirty places making smaller stores or splitting up square footage? Okay, great. Now, I'm getting two kinds of different I'm getting a bunch of different feedback about Walgreens. Okay, I got a couple of stories saying there's 8,600 stores. I got a couple of stories saying it's 8,700 stores. Okay, fine. How many are there? Now, I'm getting also a bunch of different news stories on how many stores they're closing. Okay, there's like I saw about 4 or 5 stories saying they're closing 25% of the stores. Okay, I got a couple of stories saying 91 stores. One saying 150 stores. Another one saying 450 stores. I really don't know. All I know is to make money in the stock market, you buy low, you sell high. Now, Walgreens has been in business for over 100 years. There's a Walgreens in every major city in the United States. There's some even over in Europe. Great. They get rid of the dead weight. Fine. So you keep the stores that are good. It kind of makes sense. Okay, if you got 8,700 stores and you got 100 of them that's losing money, well, you get rid of them. Okay, what happens after you get rid of them? Well, then you start being more profitable. If the stock is at an all-time low, that's the best time to buy it. Now, do you really think that Walgreens is going to go belly up? Well, there's always a chance. There's a new CEO coming. What is he going to do? I don't know. What's his track record? Okay, what has he done in the past? Is he the savior or is he the mortician? Don't know. That's an interesting question. Does anybody know? Okay, is the new CEO, is he the hatchet man? You're fired, you're fired, you're fired, you're fired. The hatchet man. Or is he the savior? Great, let's get rid of these. Let's redouble down on the social media. Let's do this, let's do this. We should be fine. Is he that guy? I don't know. Only way to find out. Okay, so Tim Wentworth was a CEO since 2003. That's not being very, positive on him. Walgreens and TikTok. That was the plan. But the feds are killing this. Walgreens was conceived for me. I have no idea what that means. 51 questions. Holy cow. But how many are they going to open up? I don't know. There's a lot of unanswered questions with Walgreens. All I know is at an all-time low. I want to buy long leaps, Walgreens, deep in the money and sell weekly against that. Well, I've already done that, Michael. Okay, I bought January options on Walgreens and I'm selling the weeklies against them. Bigfoot, okay. Emblem. Listen to you for half an hour and I'm finding out there's a lot I don't know. Okay, there's nothing wrong with that at all. You know, just you're new here. I can tell by the name. Now I'm really good with names when they pop up. Okay, I can tell who's been here for a while, who keeps coming back. You're new. Here's what I want you to take away from this. Okay, does it make sense? Only buy companies that are profitable. That makes sense. If I'm buying it for $99.50, selling somebody the rights to buy it from me for $100, and I'm getting paid 1.5% for the week, okay, and it's in an upward trend, if everything is going in my favor, yeah, I'm comfortable with that. Is there a chance it may go against me? Yes, there's a chance. But remember rule number one, never buy something you don't want to hold long term. I have bought Albemarle plenty of times in the past. I have no problem whatsoever buying them. Okay? Now, it is coincidentally the only company I lost money on this year, so the freaking thing owes me. So I just might buy it tomorrow just so I can break even. Because it's the only loss I've had this year so far on Albemarle. All right, next. Oh, let's go finish up with the question. Oh, it's 11:30. I'm going to finish up these questions and that's going to be it. Why follow the line? Okay. Whoops. BMY. Uh-oh. I missed all these questions. Zap. Never heard of them. AB. Look up Zap. I can tell you no right now, or do you really want to look it up and tell you no? ZAP. Yep, that's a no. No options. Okay, feel better? I looked it up, said no. Been going up. Yeah, but it has no options. Okay, so don't get me wrong. Zap may have the greatest employees in the world. They may be golden. I honestly really don't care. If they don't have 20 years of increased dividends, if they haven't been profitable consecutively year after year after year, I don't want nothing to do with them. Okay, I'm not looking for capital appreciation. I'm not looking to buy a stock and have it go up, up, up. I'm not looking for that. I'm looking for a company that I've heard of, okay, that I can buy at a good price, that's in an upward trend, not at a high, not at AT&T, okay, that if I'm buying it at this price and I'm selling it at this price, I'm making my 1% per week. That's all I care. The consistency of the increased dividends. That's it. If they're not increasing in dividends consistently, I don't want to look at them. Now, you may like Zap. You may like it. They may be a great company. I don't know. You may work there. I had nothing against the company whatsoever. But when I'm investing my money, my personal money, I want to make sure the company's profitable, and at least profitable for 20 consecutive years. Sorry, there's 300 companies that I'm looking at. You want me to add 301? Good. Make sure it's a good company. Zap does not fit that category, and I'm terribly sorry about that. They may have great people. Nothing against those people personally. Spot trading only when good amounts of daily gains. That's a reasonable to make. Okay, Artemis. Solano, never heard of them. Do you like supply and demand? Well, sure, why not? Some companies like ALB look good for an uptrend, but EXDiv not for a couple of months, but looks good. Okay, Mike, I'm going to agree with you. All right. Albemarle, ALB, sorry. ALB, try it again. Okay. Right at this moment, it looks great. Okay. The premiums look great. The chart looks great. But when is the dividend? It's a valid question. ALB. It's not in July. It's not in August. It's in September. Okay? But you're right, you know, I probably won't look at ALB until the end of August. But the numbers look good now. And do I mind holding it for a long period of time? No, I don't mind holding it. And this is a great time to buy it anyway. If I buy it now, I can make 1% if I have nothing else up my sleeve. Vail, we're not going to be able to get to that one tonight, sorry. Give me a good example I could put some money in short term. Okay, whales, I honestly don't know what you mean by short term. Okay? Me, short term is 5 days. Jump in on Monday or Tuesday, out on Friday. Okay? I like Abelmont. Okay? I also, what else do I like? Hold on a second. Kohl's, MPW, Win. What's my other accounts? Dell, Walgreens, Macy's. All right, let's finish up with these questions and we'll call it a night. No more stocks tonight. At the end of the live, do you go over your positions? No. Okay, see, when I say the 10-minute trader, people think that I'm on my computer all the time. No, I don't. In the morning, I'll like tonight, after I'm done, after the live, I will send out the invitation for the people for the morning trading group. Okay? I'll send out the invitation. I'll turn my computer on at 5 minutes of 9 to warm it up. And then I'm on at 9. I don't look at it. When I say 10 minutes a day, I mean 10 minutes a day. I'm very, what do you call it? I stick to my principles. If I say I'm on the computer for 5 or 10 minutes, yeah, I'm on the computer for 5 or 10 minutes doing trading. Okay, now I have trading 6 different accounts. I think I'm picking up another one this week, so that'll be 7. Damn it. But yeah, I'm not on that long. Mortician, that was funny. Savior mortician, yeah, that's funny. Well, think about it. Okay, I knew a guy, right, who used to come into restaurants, and he used to take them from a losing restaurant to a winning restaurant by serving crap and then marketing the hell out of it. And then, after he gets a certain point, he'd sell it, and all the customers were gone because they were selling crap. Freaking mortician. So we don't know. Have we done Verizon? No, we haven't looked at Verizon yet. Verizon is 3rd to the bottom, so that's got a ways to go before we get to that one. You missed Tim has been CEO since late 2023. That doesn't help it at all. You take a look at WBA. Okay. Now, you said since late 2023. Look where we are. Late 2023, July 2023 was the high. Okay, it's at 30. Then it just dropped. End of the year, she jumped up to 27, and then, yeah, so I really don't care when he took over. If he took over in late 2023, this is his track record. Don't look like a savior to me. I'm trying to DM, All right, Steve Julio, I'm trying to DM you, but your suppression. Steve, okay, I'm not quite sure why you're having an issue there, Steve. Top left-hand corner right over here, where it says Dividend Stock Talk, and my little face right there. Yeah, I just hit that, and you should be able to send me an email right from there. Delta Airlines, we're not looking at anything else tonight. Walgreens is the lowest it's ever been. Now is the time to buy. Okay, Alvin, I'm agreeing with you 100%. I actually have some Walgreens. Now, I'm not putting a huge amount in there until I see it hitting the bottom and finding the turnaround spot. Then I'll probably double down my efforts. But until then, I'm going to keep watching it every day, because eventually we're going to find a bottom. And you know what I like about Walgreens? Check this out. Now, some of you guys may think it's a loser, but you got to keep this in mind. WBA, We're going to look at what the book value is. Okay, statistics. Slide all the way down right there. Okay? Book value right there, 1580. So if, hey, Pete, how's it going there, Pete, over on Facebook? So if you think about it this way, all right, if they took everything Walgreens owns, every single thing, and liquidated it, this is the value right there, 1580, all right? That's the value of Walgreens, despite all the crap and all the bad news. You sell everything the company owns, that's what you're going to walk away. That is higher than the purchase price, okay? If the book value is higher than the purchase price, how can you go wrong? Think about it. You liquidate and you're making money. There you go. Okay, so I think we're just about done for the night. All right, no more questions. EC Colombian Oil Companies has highest dividend. Oh, wow. EC. Got to take a look at this one. That's a no. Okay. Who said that one? Gyrock? Girock? Whatever. 1126. Yeah, that's going to be a fat no. Sorry, dude. I don't do monthlies. Monthlies just don't pay. They just don't pay the same as a weekly optional stock will. EC. Let's take a look at the dividends on EC. Just for the hell of it. Whoops. Dividends only. Oh, yeah. Okay, so they've been paying dividends since 08. 26, 24, 30, 64, 70, 33, 31, 53, 52, 54, 341, that's nice. 321, 265, 301, what 103? What are they teasing you, giving a big fat one and then decreasing it? It goes from 341 in 2012. 2013, it's 321, decreasing. 2014, decreasing again to 265. 2015, decreasing again to 103. Nothing in 2016. 2017 is 16 cents. Dude, really, what the hell are you thinking? Seriously. Okay? What do you mean the best dividends? These things are crappy. They keep going down. There's no consistency whatsoever. Arrow, how are you doing? Sign up for Fidelity at Charles Schwab. Okay, Arrow, I really can't tell you what to do. You have to figure out what is right for you. I would like to start buying covered calls at low and selling at the high, but where should I begin? Arrow, you've been here before, okay? Unless someone else has that name, but I didn't see it, okay? It's really supposed to be a simple scenario. Buy a stock, a good one, sell someone the rights to buy it from you for the exact same price you paid for it, grab your premium, say thank you very much, I'll see you again next week. And then just do it week after week after week. It's really not that difficult. Do not make it more complicated than it needs to be. It's actually pretty simple. All right, I'm going to wrap it up for the night. It's 1:15, which we went a little bit late, which is fine. Okay, so see you guys later on Instagram. Bye. Hakuna, make sure you DM me, dude. All right, finished over here on Facebook. Bye, you guys. Yeah, see, one thing I don't like about Facebook, you can only post it for 30 days. And then what? 30 days? Then what? That's, okay. All right, done over here. We'll do that one in a second. Bye, you guys over here. Remember, if you really want to talk to me, DM me your phone number, DM, and I'll call you. Okay, bye over here on YouTube.